What's up, everybody? Just wanted to make a quick video talking about the S&P. We're looking at the futures contracts right now, and this is a channel that I've had up for a while on this contract. So in this video, I want to talk about, as we approach it, what do I think? Why was it there in the first place? And you just kind of get out with that. So if you are new here, price action trader, I know this is Don Fron Trading. This is actually my investment channel, like what I do with my money, but my main income is from trading. So while this might have some trading talk to it, this definitely pertains to investments and stuff like that. Yesterday we got the FOMC, Powell raised it, so 0.75. Inflation's clearly out of control. You got Wall Street bets talking about this is the Great Depression again. Same crash as like the 1920s where it crashed 80%. And I definitely wouldn't go that far. That would suck if we did. Something we talked about, something I talked about last year was a possible. Well, I told you guys we would crash. I don't want to say we for sure would. I'm 2 for 2 on talking about crashes. And I don't say always. So far, it's been the year prior. Hey, we're going to crash next year. Coincidentally, we have. The first year was the Rona crash, 50%, just like we talked about. I said we'd crash this year 30%. We're almost there. And my reasoning behind that was something to. This is how the S&P normally trades. You can see we're on a weekly. Here's our highs. Here's our lows. Like that even has a couple corrections in there. Like we're within normal means. Everyone's just being normal volatility, right? So then we got the Rona crash, which most people think it started here, but it actually started here. They pumped it up, and largely they need the liquidity. They need someone to sell their shares to. So tinfoil hat theory. This is what we're talking about, like in my mentorship. They ran it up, creates that liquidity, everybody FOMO buying, so then they can fill their sell orders on the way down. Obviously couldn't fill all of them because we got the complete utter crash. Then we got the super V recovery, which most people, a lot of newcomers came into the market and all they saw was this, right? They think that's normal activity. This is not. This is a lot of hype coming in, and then now the hype is leaving. Some of you guys are even exiting the market because you think, I'm just not cut out for this. Like, you just don't know. That's not a bad thing. You don't know what you don't know. And if this is all your experience is, this market probably does look really different to you, because back here, everyone was a YouTube guru. All you had to do was show up, and you made money. That was it. The crash I talked about last year that we would have this year would be erasing that, closing that chapter, shutting it all down, getting back to normal. Because right now, I think this one takes the cake. Peloton. A lot of tickers look like this. Here's the hype coming in. 2021's a blast. Well, 2020 was. 2021 not so much. But look at that. This thing was at a high of $171, and now it's $9. Right? A lot of like money just came in. It flowed into everything. We had I think 2020 was the year of EVs. 2021 was the year of SPACs. It just kind of had its theme where everyone would just put their money. People were coming on YouTube talking about all the bullish reasons why, and that didn't mean anything. What's another one? I always type this wrong. Rivian. That's a cool story. I actually participated in this one. I bought this at the IPO. It did push up. Now, I actually sold around 150. I got made fun of on one of my tweets for selling it at 150 because the next day it pushed up. Yeah, it was at 179. Now it's at $26. Okay, because some of these things, one, they should have never been that high in the first place. Two, people don't understand this whole game is supply and demand. As long as someone's there buying it, it's going to go up. More buyers, it goes up. More sellers, it goes down. And that's all this will ever be. There's got to be an excuse to lead the way, or your little brains would pop. Like, why is it going up? I didn't see any news. I didn't see an excuse. Like, well, everyone felt like buying it that day. That's why. There's always got to be like a narrative to send this thing somewhere. And something I even mentioned was it 2019? I wish I would have stuck with it a little bit more. I mentioned it one time in passing. We'd heard about a virus in China. People were just dying on the sidewalks. And I said, man, if they could use that as an excuse next year, full send's just going to be a reset button. Thought it was going to be more politically political excuse. It turns out they took Rona for a ride, right? And everyone made billions, unless you were long the market and you didn't short it, and then you got poor. And then all of a sudden, you're rich again. What's a couple other ones that look like this? PIN. This didn't even join the S&P 500. Here's another one. DraftKings, because stocks only go up. Except they don't. This one's also at a high of $74. Now it's at $10. Man, I could probably go on for days. I was trying to think of another good one. What's Zoom doing? Oh, here's another perfect one. Zoom. Kathy Woods loves this one. At a high of 588, it's now $105. That's. I'm curious. Well, it took longer than a slot machine, but man, getting wrecked. What about Zillow? I was a fan of Zillow for a while, but you notice how I was a fan of Zillow when when the green candles were there, then the red candle showed up, and I just wasn't. That's called the middle finger pattern. I mean, that is as clear as day as it gets. F you to your portfolio. Did we already talk about this? A high of $208. Now it is $29. All right, so let's talk about what's going to happen going forward. One, these tickers probably still going to look like this. Best case scenario, they flatten out, as in they just go flat. Some of you guys are looking at this thing like, and this is completely wrong, but I know some YouTubers say this. Look at the margin it created. What if it gets back to all-time highs? Yeah, that's a cool what if. What if you guys guessed the winning 6 lottery numbers? That's really cool. We can talk about that. I love that conversation. Personally, when I have that talk, I tell my buddy Nick, if I ever win the lottery, I'm not going to tell him. I'm literally just going to go buy a truck, and I'm going to drive sideways through his driveway just to plow through all the cars. And that's how he's going to find out, because it's going to be hilarious. But because that's not the world I operate in, I can't live off of what ifs. I have to plan accordingly. I can't assume that Zillow is going to have a 620% day and all of a sudden get back to break even, back to all-time highs. And a lot of this does resemble the dot-com crash, where a lot of money just came in. Everybody was just buying for no apparent reason. And then it went on for so long. That's how people thought things operated. And that's what we see. Let's just hang on. I got a clearer one right over here. This is the weekly chart of the S&P futures, where things crash. Everyone thinks things operate this way, and now they're finding out it doesn't. Right now, they think the world's on fire and the sky is falling. And sure, we're selling off. Turns out we can't print trillions of dollars. Well, I saw another YouTube video. Who was it? The hippie guy. Used to be an actor, comedian. Russell Brand. He was talking to somebody. I guess we printed 600 years worth of the dollar in like the last 10 years. Yeah, there's ramifications for that. So we are selling off. That's not a good sign as far as the economy goes. So we're melting off into the abyss because some of you guys are really just still googly-eyed at the top over here. Really, we're just getting back to normal. But the question a lot of people are asking are, hey, do you think we're going to bounce at the top of this channel? This channel I drew is borderline irrelevant. That's more of a story base for me of here's normal. If we continued our normal trend, we'd be about here. And last year I talked about how we would probably get back into it. I wouldn't play this line. I will entertain buying at the bottom of this channel. But right now I'm still thinking a crash of 30%. And even on average, crashes are about 30%. I think this blue line, I think that's exactly why I drew it. Because that is 30%. I might have just slopped it up there one day because that's technically it's 29.5%. So that puts us right here. That puts us right at the peak right before the Rona crash, and it puts us right in the middle. What we had was this volatility box. Some of you guys might remember this. We called it a volatility box, and I think maybe even Don Kaufman might have coined that term. That's what he was calling it. Sounded good to me because we were just in this box back and forth for a while. And we finally broke out and ripped up. I'm kind of thinking we get caught somewhere in that trap again, and that's where the bottom will end up being. But that would put us right here. So we might see some buy orders here. We might see a green week. Remember when everyone was talking about how it's been 1, 2, 3, 4, 5, 6... 1, 2, 3, 4, 5, 6, 7 red weeks. 8 red weeks is gonna be it's gonna break the record from the longest sell-off we've ever had. And then all they did was a green week right up to one of my yellow boxes and sold right back off. Here, guys, shut up. Not gonna break any records. One green week, and then we're right back into the red trend. It's just an oversold bounce. I thought we'd see that today. We didn't. We bounced yesterday a little bit, and then like we talked about in last night's video, if you are swinging long, get ready for a gap down, and good thing we did that. If I hadn't locked in those profits on half those contracts, today would have been a much more red day for me. But I did swing long. Today was red. I had to go short. I'm finally green again just on that. And just because I'm not getting stuck in any directional bias, as long as I'm playing the 15 minute, to be honest, and as long as we just keep trending down, it's just kind of where we're at. As far as catching a knife goes for the S&P, I think we're getting close. My investment account is going to get a lot more. I'll say I'm easing into plays right here. Here's where I'm going to really lean into things, unless, of course, we see that complete, utter capitulation where everybody's just melting off. If I see we're grinding down, these are the zones I'm going to start chipping into some things. I've bought enough Google recently. I've bought enough of those plays that I just didn't have, but now I'm going to start adding to them. So it'll still be Tesla, Facebook, Google. Those are still my top 3, actually. I might chunk in a little bit of Amazon. I'm just not a big fan of it. It was just a great one to trade. But again, down here, and it wouldn't surprise me if a scenario I gave out the other day on my mentorship group was, hey, do you think we'll bounce here? We're gonna hit the bottom, and we might just get trapped in this, go sideways for what might seem an eternity, but eventually the bottom catches up, and then we bounce off the bottom, and I'll get to say I was correct later or something. You know, I don't know if we'll just go screaming to the bottom. Long story short, if there's any red momentum, I'm probably going to wait to chunk in. I'm buying here regardless. It's what I call a rain or shine event. When we get in here, just know my investment account's getting something. I'm going to bring some averages down for sure. Now we get to this bottom zone. If we are just smooth, liquid, selling off, going for it, then I'm not. I'm going to hang out. Or maybe I chunk in a little bit. When I say I'm going in, if I see just some little red candles, we're still on that grind, but we kind of hit this area, that's when, like I told you guys in a previous video, I do automatic investments plus an automatic chunk goes into my savings account. That's when the savings account gets rolled into. I want to see this bottom zone on the S&P. I also want to not see any just giant red momentum. We're just hopping and skipping all the way down. That being said, that'll be a decision I have to make that day. If I see that, then I'm just going to wait. I like to skip the red candles on my investment accounts. If I'm short, I like to trade them and go short. So I'll wrap it up here, but I wanted to go over kind of just this channel. And it seems like we're getting close. I think we are close to the final days of at least a bottom. But to be clear, when I call out a stock market bottom, that does not automatically mean we're headed to all-time highs. I think we might see a bottom. We might bump up a bit, and we just might chop around for a while. We might slowly start our grind back up. Remember the last time the S&P was in the 300s like this? It was like, I guess it had to be before. It was back here. Yeah, we just broke into the 300s. If you've been trading for a while, remember the S&P would push up 50, 75 cents on a good day? That's normal. Not limit up, limit down, just run whichever. That's the top 500 tickers in the market. And here we are, just chipping away. Like, that's just not how things work. Alright, so I'll wrap it up here. If we see just that complete meltdown, you probably won't need me to make a video. Obviously I will, but at that point, you'll recognize it. There's no point in saying, hey Don, we sold off $3. You think this is it? Like, it will be recognizable. You'll see it. I won't need to tell you. If you've been in the market for longer than 5 days, you'll be able to see exactly what I'm talking about if we get to that. If that does show up, I don't care what zone I'm in, I'm going to wait. But when that selling does stop, regardless of where we're at on the map, that's when I'm going in. Those are the two things I'm looking for. This zone without that, or if we get that, wait for the selling to stop and try to nail that bottom. So I'll wrap it up here. Let me know in the comments down below. What is your trading plan? I know some of you guys are just perma bears. You think SPY is going to 100. Some of you guys are perma bulls. You're probably feeling it right now. But if it helps you sleep any better, I think Graham Stephan's got another great video. They're all the same. Dollar cost average. You just keep on buying. Just keep on buying. Just keep on buying. The cool thing about dollar cost averaging, if you do it enough before the ticker gets delisted, it'll actually bring your average down quite a bit. And maybe eventually you'll even be green. I just wouldn't let it go red again. But if it's in an index, well, historically it hasn't. SPY hasn't been delisted yet, like GM or Boeing. We've never seen SPY go away and then come back. So I guess as long as that pertains, you're probably still good. Just keep dollar cost averaging. You'll come back one day, and then you can be a trader again. I'll wrap it up here. Hit the subscribe button, and I'll see you guys